Welcome to the channel. Here, we provide clear, actionable insights into the complex world of tax and accounting to help your business thrive.
Today, we're going to talk about a really powerful but temporary tax strategy that every S-Corp or LLC owner in a high-tech state really needs to know about. It's called the pass-through entity, or PTE tax election. And yeah, it could save you thousands. So let's get right into it. First things first, let's talk about a problem that, is probably all too familiar. If you're a successful business owner, especially somewhere like California or New York, you are absolutely feeling the pinch from federal tax laws. I mean, does this just hit home for you? You're paying a ton in state income taxes on your business profits, but then when you go to file your federal return, you just hit a brick wall. And that brick wall? Well, it's the federal government's cap on what we call state and local taxes, or the SALT cap. It limits your total personal deduction for all your state taxes, income, property, you name it, to just $10,000 a year. For anyone making good money, this cap means a huge chunk of the state taxes you pay gives you absolutely zero federal tax benefit. Okay, let's make this real. Picture an S-Corp owner in California. They have $500,000 in pass-through income. Now, at about a 10% state tax rate, they owe $50,000 to California. But because of that SALT cap, they can only deduct $10,000 on their federal return. That leaves $40,000 of state tax they already paid that they just can't deduct. That's a huge amount of lost tax savings. It just doesn't feel right, does it? But what if there is a completely legal way around this? A way to change how you pay that tax, so you can bypass this personal limit and deduct the whole thing? Well, guess what? There is. And that's where the pass-through entity, or PTE, tax election comes in. It's this really clever strategy that a lot of states created to fight back against the federal SALT cap. Basically, instead of you, the owner, paying the state income tax personally, your business elects to pay it for you. The easiest way to think about it is this. The strategy just moves the tax payment out of your personal pocket, where it gets slammed by that $10,000 limit, and moves it over to your business's pocket. And from there, it becomes a totally normal, fully deductible business expense. So, how does this little magic trick actually play out? The idea is pretty simple, but it's really important to get how the mechanics work. So let's compare the two ways of doing things. Here it is, the big difference. On the left, the old way. You pay the tax personally. It's an itemized deduction, and boom, it gets hit by that $10,000 SALT cap. But on the right, with the PTE election, your business pays the tax. And just like that, it's a business expense fully deductible against your business income. No cap. Let's go back to our California example to see the play-by-play. The S-Corp says, hey, we're doing the PTE, and it pays a 9.3% tax to the state for the owner. That payment directly lowers the business's federal taxable income. Then when the owner files their own California tax return, they get a credit for the exact amount the business already paid. It's this perfect little loop that makes both the state and the feds happy, and it makes your state tax fully deductible. Okay, that all sounds great, but let's talk about what really matters. What does this mean for your bank account? Let's get back to our case study and look at the actual numbers. The impact here is just wow. It's huge. Without the PTE election, our owner's federal taxable income is $490,000. But with the PTE election, they get to deduct the entire $50,000 state tax bill, dropping their federal taxable income all the way down to $450,000. So here's the bottom line. That extra $40,000 deduction, that's the whole ballgame. If we figure our business owner is in, say, a 30% federal tax bracket, that bigger deduction translates directly into $12,000 of cold, hard cash, federal tax savings, in just 1 year. I mean, that is a serious result. Now, before you run off and call your accountant, and you definitely should, it's super important to know that while this strategy is amazing, it has some very specific rules and limits. It's not for every single person or every business. First, and this is a big one, you have to understand this is a temporary law. It was created back in 2021 specifically to get around the SALT cap, and right now it's scheduled to just go away at the end of 2025. That means the clock is ticking. And you also have to see that critical deadline. June 15th is usually the day you have to make the election and a prepayment. And there's more you got to think about. Does your state even offer a PTE election? More than 30 states do, but you have to check if yours is on the list. Is your business an S-Corp or an LLC? Because the rules are different everywhere. And believe me, it can get complicated fast. And again, I can't stress this enough. Those deadlines are no joke. You miss them, and you're out of luck for the whole year.
So, if you're thinking this might be right for you, here's your action plan. Step 1, confirm your state actually has this law. Step 2, and this is absolutely the most important one, talk to your tax pro. They can run the numbers for your exact situation. Step 3, if it's a go, have your business make the official election. And step 4, make sure your business makes that required prepayment by the deadline. In California, that's at least $1,000 by June 15th.
And this really drives home why you should not try to figure this out on your own. As attorney John Chung puts it, the process is not simple. It's advisable to proceed with an expert. Because the law is pretty new and it's temporary, getting it right really does require a professional to guide you. So, that all brings us to the final question, right? With the clock ticking down to that 2025 expiration date, this workaround is a huge but fleeting opportunity. For the right business owner, it's a real chance to turn a major tax headache into thousands of dollars in savings. The only question left is, will you be one of them?